Very good morning, viewers and my dear students. And this time I am going to upload a video on demerger and what are the various tax incentives which are available to the demerged company that I am going to discuss. Now, the business and economic environment of the country has thrown up the need for rationalization of laws relating to business reorganization for restructuring of production system and better utilization of resources, which have become necessary with a view to enable the Indian industry to rearrange itself to become globally competitive. With this view, demerger has been made tax neutral and it does not attract any additional tax liability. In demerger, tax benefits and concessions available to any undertaking shall be available on its transfer to the resulting company. Now, in this perspective, let me define demerger in a concise form. Demerger in relation to a company means the transfer pursuant to a scheme of arrangement under Section 230 to 232 of the Companies Act 2013 by a demerged company of its one or more undertakings to any resulting company. Now, at this juncture, let me define what is the meaning of demerged company. It means the company whose undertaking is transferred pursuant to a demerger to a resulting company. Now, resulting company, let me define what is called a resulting company. It means one or more companies, including a wholly owned subsidiary thereof, to which the undertaking of the demerged company is transferred in a demerger, and the resulting company, in consideration of such transfer of undertaking, issues shares to the shareholders of the demerged company. It also includes any authority or body or local authority or public sector company or a company established, constituted or formed as a result of demerger. Now let me discuss the tax incentives to shareholders of demerged company. In this, the point number one is period of holding of shares of the resulting company, where shares, a capital asset in an Indian company, which becomes the property of the assessee in consideration of demerger, there shall be included the period for which the shares in the demerged company were held by the assessee. This is as per Section 2, subsection 42A, clause G. Point number two, exemption from tax on exchange of shares. Next, tax incentives which are available to demerged company. Under this, number one is plant or machinery transferred on which investment allowance is claimed. If such asset is transferred under a scheme of demerger, the benefit of deduction under Section 32 AD shall not be withdrawn. Number two, exemption from capital gains. Number three, tax concession to foreign company. Number four, exemption from tax liability on transfer of license to operate telecommunication services, etc. Now I am coming to tax incentives to resulting company. Under this, the number one is capital expenditure for obtaining license to operate telecommunication service, etc. Wherein in a scheme of demerger, the demerged company sales or transfers the right to use spectrum for telecommunication services or the license to operate telecommunication services to the resulting company, being an Indian company. The resulting company is entitled to claim deduction in respect of the the remaining installments of such capital expenditure. This is given under section 35 ABA subsection 7 and section 35 ABB subsection 7. Number 2, preliminary expenses, where the undertaking of an Indian company which is entitled to deduct such expenses is transferred to another company in a scheme of demerger. The resulting company is entitled to claim deduction in respect of remaining installments of such expenses. This is as per section 35D subsection 5A. Third point, expenses for demerger, where an Indian company incurs expenditure wholly and exclusively for the purpose of demerger, it shall be allowed a deduction at the rate 20% of such expenditure for each of 5 successive previous years, beginning with the previous year in which demerger takes place. This is as per the provisions of section 35 DD. Next, number 4, expenses incurred under voluntary retirement scheme, where the undertaking of an Indian company entitled to deduct such expenses is transferred to another company in a scheme of demerger. The resulting company is entitled to claim deduction in respect of remaining installments of such expenses. Point number 5, expenses on prospecting etc. of certain minerals, where the undertaking of an Indian company entitled to deduction in respect of expenditure incurred on prospecting for or extraction or production of certain minerals is transferred to another Indian company in a scheme of demerger. The resulting company is entitled to claim deduction in respect of remaining installments of such expenses. Section 35 subsection E clause 7A. Point number 6, expenses on prospecting etc. of petroleum and natural gas, where in a scheme of demerger, the demerged company sales or transfers the business to the resulting company, being an Indian company, before claiming full deduction in respect of expenditure incurred on prospecting for or extraction or production of petroleum and natural gas. The resulting company is entitled to claim deduction in respect of such expenditure. This is given under section 42, subsection 2. Point number 7, actual cost of an asset, where in a scheme of demerger, any capital asset is transferred by the demerged company to resulting company and the resulting company is an Indian company. The actual cost of the transferred capital asset to the resulting company shall be taken to be the same as it would have been if the demerged company had continued to hold the capital asset for the purpose of its own business. However, such actual cost shall not exceed the written down value of such capital asset in the hands of the demerged company. This is given under section 43 subsection 1 explanation 7A. Point number 8, written down value of the block of assets, where in a previous year any asset forming part of the block of assets is transferred by a demerged company to the resulting company. The WDV of the block of assets in the case of the resulting company shall be the WDV of assets transferred of the demerged company immediately before the demerger. This is as per section 43 subsection 6 explanation 2B. Point number 9, deduction in respect of profits from undertaking. Deduction is allowed from gross total income under section 80 IAB, 80 IB, 80 IC, 80 IE on fulfillment of certain conditions. If the resulting company fulfills those conditions, it is entitled to the deduction of unexpired period specified in the section resulting in reduction in tax liability. Point number 10, where a unit in special economic zone is transferred to another unit In a scheme of demerger, the exemption shall be allowed to the other unit for the unexpired period. This is as per section 10AA subsection 5. Point number 11, where in a scheme of demerger, the demerged company transfers its business to the resulting company before the expiry of the option for tonnage tax scheme. The tonnage tax scheme shall apply to the resulting company for the unexpired period if it is a qualifying company. This is as per section 115YZ. And I'm coming to last, accumulated non-speculative business losses and unabsorbed depreciation in case of demerger. Where there has been a demerger of an undertaking, the accumulated loss and the unabsorbed depreciation directly relatable to the undertaking transferred by the demerged company to the resulting company shall be allowed to be carried forward and set off in the hands of the resulting company. If the accumulated loss or unabsorbed depreciation is not directly relatable to the undertaking, the same will be apportioned between the demerged company and the resulting company in the same proportion in which the value of the assets have been retained and transferred. And coming to the last point, the central government may notify such conditions as it considers necessary to ensure the demerger is for genuine business purpose. So that is all about.